Bill Bush here with Horizon Financial Group with a quick look at target date funds. Now, you may have heard about these funds in your company retirement plan. They may also go by the name of life cycle funds or age-based funds. But what are they and how do they work? Well, a target date fund is a single fund that's made up of many other funds. Its goal is to be a one-stop fund that eyes retirement around a particular year. Now, that target retirement date is expressed as a year in the fund's name. Fund companies that manage target date funds usually create them in 5-year increments. For instance, the XYZ 2035 fund is designed for someone who is eyeing retirement around that year 2035, give or take a couple years. Whereas the XYZ 2020 fund, it would be appropriate for someone a little older, closer to retirement, who's looking to retire in the years 2018 to 2022 or so. Inside each target date fund, there are a variety of asset classes and mutual funds within those asset classes, ranging on the risk-reward scale, the very conservative cash or cash equivalents, up to various types of bond funds, and then more aggressive stock or equity classes like large cap, mid cap, small cap, and international stock funds. The percentage mix of those funds inside the target date will change over the years by the manager of the fund, giving an investor built-in diversification and an asset allocation strategy to or through retirement. Target date funds are managed to get more conservative the closer they get to approaching that target retirement. The idea is to take more risk while the target date is far in the future, trying to maximize potential returns, and then dial down that risk as that retirement date approaches, seeking to preserve capital and avoid potentially big losses. That change in asset allocation over the years is called the fund's glide path. And here's an example of how that works. Take the ABC 2060 fund. Now, right now, some 40 years away from the year 2060, that fund is made up of 90% equities and only 10% of bond funds. But as time goes by, that fund becomes more conservative. You see the stock or equity portion of that fund shrink, and the bond and then the cash portion grow. So when you get to the year 2060, the asset allocation is far more conservative than it once was, but appropriate for someone who is retiring around that year. Target date glide paths do vary from fund to fund. Some have what's called a glide to path, where the fund reaches a set percentage asset allocation at the prescribed target year and then doesn't change after that. Others take a glide through approach, where the fund will continue to change its investment mix several years after that named target date. Now, some advantages of investing in target date funds. Well, each fund has a professional manager who is striving to meet the fund's goals. The fund is automatically rebalanced to stay within the fund's parameters. If one particular asset class grows more than the others in a year and the fund's mix is out of line, well, that fund is adjusted automatically to get back in line with the goal, so the investor doesn't have to worry about rebalancing themselves. And the other advantage is the defined asset allocation strategy leading to retirement. You just pick the date and the experts do the allocating for you. A few misconceptions we hear about target date funds. A target date fund guarantees I'll have enough money for retirement. No, sorry, there are no guarantees. Investing in target date funds involves risk, and they are subject to market conditions. They address asset allocation. But what the value of the account will be when you reach retirement involves many factors, including how much of your salary you are deferring into your retirement account. Here's another. I can't lose money if I invest in a target date fund. False. The value of the investments inside a target date can fluctuate depending on market conditions. They can go up or they can go down. Again, there are no performance guarantees. And finally, all target dates targeting the same year are exactly the same. False. Each fund is owned and managed differently. The underlying investments not only are different, but the asset allocation and glide path can be different also. Remember, some are managed to that retirement date, and some funds glide past through that retirement date. Well, that's a quick look at target date funds. If you have a question about the funds in your company retirement plan, please feel free to give us a call at Horizon Financial Group.